Hi traders and welcome to the Technical Analysis Market Watch on Friday the 14th of November. So I've seen a bit of a market meltdown of sorts in the last 24 hours and we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, I'm going to start out here with the US dollar CAD today because this is one that we were identifying last week as a potential trade opportunity from this support zone that we have actually landed on around that 139.80, and we can see that it's actually trying, it spent the whole week actually trying to get above this 20 moving average, which is a really good sign for it. So we can see that even though the market was in a bit of a meltdown state, we can see that it actually pushed up past the 20 moving average in that session, and it's trying to basically get above it again today. We've got the higher low sequence again in place, and that pullback that came back all the way to this roll reversal zone that we talked about last week at that 139.80 area has been tested and pushed off. So it's one of those levels that you can look at it with a little bit of comfort and say, all right, we've got a support zone because it was previous resistance. So that makes it the classic roll reversal. We've still got the higher low sequence. And it also came back to the, obviously the morning star pattern that we saw here that blasted off. So there is a reasonable amount of support at this level. If we see a sequence of higher highs and higher lows on a smaller time frame, that's what we're really looking to help propel this up to the previous targets at around that 141-ish as the first target, because that's where the previous high was in this initial move. Ideally, we can probably see a move up to the 141.80, but initially we'd be looking for that sharper move up to the previous high, and then we'll reassess from that zone onwards. If for some reason it turns around and starts to break down and the daily starts trading underneath the 139.50, that is another story altogether, and then we'll be starting to look at these lows again at around a sort of 139 flat. That would be the shorter term target on the CAD. So right now, though, the momentum is looking good from this support zone, and we want to basically isolate a high low sequence on a smaller time frame, like a 1 hour or a 15-minute chart, and look to extend up to around that 141.10 as the target for that one. We'll have a look at the dollar index. We'll go to the dollar index next. This one has been weak for basically the entire week. Has been a weakening market. You can see here it's struggling for dear life to hold above that 20 moving average, and what is also quite an important roll reversal zone around that sort of 99.20 to 30 area. It's a real problem for it. Look, it's still in an uptrend. There's no question about that over the longer term. We've got plenty going on there in terms of the push up from the moving average, but there is still a little bit of work to do. So it's really going to come down to whether the price can actually maintain its level above this 199 sort of 20 area, but also just as importantly, the 20 moving average. If we start to see action above there, the previous high that we can see here around that sort of 100.50 level, that's the area that we'd be aiming for on the initial move. If, however, we see too much resistance in front of it and it starts to sell off and we start to see a series of lower highs and lower lows on a smaller time frame, and we get a daily close below 99, all of a sudden that really opens up this 98.50 as the level to really aim for basically on the short. So really what we're trying to do, though, we would prefer from a bias standpoint and what technical soundness there is at this level, that it would start to pick up from here and look for a move back up to the 100.50. There is a scenario for both, and I think I would probably trade both. Both of them are viable trades, but I've got a slight bias to the upside because it makes more sense from a technical standpoint, and there is enough momentum on the bigger time frame still to give us a move in that direction. So ideally, that's what we want to be seeing there. Hopefully that makes sense there. Let's move on to the S&P 500, which saw a really big drop in the previous session. You can see that it really just basically sank into a lull. Basically, I'll just quickly fix this auto, and you can see from the start of the session, it just started to sell off. The beautiful thing about these sorts of moves, even if you were trading it intraday and you were actually there while it was happening, it gave you about 3 entries to actually join that existing trend. So as much as it looks like a big red candle, which it is on a daily where it saw a lot of action on the way down, it actually gave us plenty of warning that it was doing it. You could see the lower high, lower lows, there again to the 20, there again to the 20 with a lower high, a real key there. And then even on this break candle, once that candle broke down, it broke a level of support that we know was there previously on the smaller time frames, and then down it came. And it gave us one more chance at around this level here, around the 68.30, before it completely capitulated. So I know a lot of people got hold of this one. The hour probably would have been a little bit too sharp. I'm not sure. Yeah, you wouldn't have seen anything there. But That said, we are at a level of support now. I have struggled to find a real reason for the sell. The market's really saying that there's concerns about rate cuts and everything else, but that's a big drop for a concern over a rate cut that is I guess on the cards but not really guaranteed anyway. It's at support now. That we know for sure. Like we can see here, we've got at 67.50. We know that it had problems getting through there in the first instance. You can see that we've got pretty strong resistance at that point, and it's there right now. It's broken through the 20 moving average. Its next move now is going to be the key one. When we really see a day's worth of trading, it's either going to try and find some momentum and push up above the 20 moving average again and launch off up here. And at that point, we'd be aiming for that 68.50 again as the target. But if it continues to sell off and we start to see weakness, so we start to see lower high and lower lows forming on the smaller time frames, I'd be starting to aim for that 66 sort of 20 area as the next target, because we know that we've got a pretty strong support zone there as well that could help hold it up. So either way, it's in the middle of the channel that we're really isolating, the high of 68.50 and the low of 66.30 or to 20. That's the area that we'd be looking for in this move. Whichever way the momentum shifts on the smaller time frames is the direction I would go for, and just look for those pullbacks to the 20 moving average like we saw earlier. Pretty good trading potential there, but that's a big move. It'd be very interesting to see what it does from here. All right, we'll move over to gold now. And yeah, gold's had a pretty good week. It's one of those ones, look, it broke out of the symmetrical triangle like we discussed last week. It's had a very, very strong week. And again, even though the session was a little bit soft, it's starting to rally in the Asian session today. Really, it's found a little bit of support here. You can see that we had nearly a week's worth of touching of this level. So it's a respected level, but it is a new level. We must be mindful of that as well, that this particular level's only been around for a couple of, a handful of weeks really, because obviously we're in uncharted territory. So we can only take that support with a grain of salt, but it is there. And it touched it. It's effectively the third touch today. As you can see, we've got that candle there, and it again touched it in the previous session. Effectively, if we get a close above 42.30 and we get a daily close above here, I'd be starting to look for the previous highs as the target, so around that 43.50 as the target for the long. And if we see a bit of a sell-off and it's trading underneath the 51 or the 41.50, sorry, I would be aiming for the 20 moving average as the target for the short. I wouldn't be looking for anything longer term on gold. I'd be keeping them relatively short, these trades, because they are relatively new to this support area, and there is a fair bit of volatility in the market, obviously, so we would expect gold to react in either direction. I'd be happy to trade it. I think that there's a case that can be made for both sides. It's pretty good there. And we'll have a look at Bitcoin, because I know there's a lot of people looking at Bitcoin right now, and we saw a very, very big volatile session. There were some very extreme moves throughout that session, and now we're trading right in the very dangerous zone of around that 99,000. Like I've said many times over the last few weeks, if we see a daily close below these levels and it starts to trend down, there's a potential for a $7,000 or $8,000 drop, which would bring it down to around that sort of 92,000 to 91.50. It seems like it's a long way away, but it's really not that far away at all when you look at it from a charting perspective. And there's no question now that we're in a very strong downtrend. You can see that we've got lower high, lower lows happening on the daily. We've got a big giant head and shoulders, which would fulfill its pattern at around that 91,000. So, and we had a head and shoulders pattern that's already fulfilled effectively on the right shoulder of that initial head and shoulders. So there's a lot going for it, especially from a technical standpoint. It's been very, very sound in terms of technicals, but this is the do or die level. If we can't hold at around that 99,000 ish area, if we're trading under 99, sort of high 98,000s with a daily close, I'd be looking for momentum shifts down and looking for a bigger target of around 92,000, which is where this red line is here. That is more than likely the target for the short. If, however, it gets itself back up again, I'd be aiming only for the 20 moving average, because I think the 20 moving average has contained any move up currently. And if it does it fairly quickly, we're still sort of probably sitting around that sort of 103 to 102 level, depending on how fast the moving average moves now. But I'd be aiming for the 20 moving average as a target on the way up. I wouldn't be going any higher than that until we get a proper momentum break. So I'd be keeping the trades relatively tight. but I would only be doing that if it's trading above the 101,000. If it doesn't get above that 101,000 zone for daily, I wouldn't even look at the long. And if it does that, I'd be aiming for the 20 moving average. But if we see a daily close below 99, sort of 98, 800, something like that, I'd be looking for momentum moves down to around 92,000. So that's the ideal on Bitcoin. So I hope you've had a great week's trading. We've seen some very good volatility, and the levels are certainly playing the game and holding up the markets right now. So it'd be very interesting to see the next session. Have a fantastic weekend. I look forward to seeing you all next week.